Everybody talks about housing affordability, affordability, affordability. It's so bad. Yes, it is. It's way worse than it was years ago. But guess what? It's getting better and it's going to continue to get better. We have the report here, housing affordability. It didn't worsen in 2024. And this is the first time in 4 years that it didn't worsen. If you go down to the chart, you'll see, well, first off, what did it tell us? Um, People in the U.S., right, that have the U.S. median income that buy a median price house, they're spending 41.8% of their monthly earnings on housing costs to buy a typical home, right? And that's an improvement from 2 years before where it was 42.2%. So not a massive decrease, but a decrease nevertheless. And I'm going to take whatever I can get in this environment. So when you look at from 2012 to 2020, even 2021, you can see that the percentage of people's monthly incomes that they put towards buying and owning a house was somewhere between 23% and 32%, right? Somewhere around in there. And in 2022, it jumped up. Why did it jump up? It jumped up because of inflation, home prices, mortgage rates jumped up that year. And so all that combined to make affordability decrease, right? And more of a percentage of your monthly household income had to go towards buying a home if you wanted to buy a home. And then it jumped up to 42.2% in 2023. And you see, we decreased a little, not a whole lot, but a little, which means that we have hit the top. And that's the thing. You can't keep going. You can't go to 50. You can't go to 60. People will just stop buying homes. Well, people haven't stopped buying homes. Okay. So why has affordability come down if home prices are still high? They went up 5.4% last year. If people are still buying homes, right? How did affordability go down? I'm going to share that with you in just a second. But if you look at the places in America that are the least affordable, you're looking at Los Angeles, San Francisco, and Anaheim. So if you notice, all those are in California. Okay. And people there are spending 75% of their monthly income to buy a home. People that own homes, right? If you buy a house right now, that doesn't mean everybody that owns a home is spending 75% of the income to own the home. If you bought the home 2 years ago when mortgage rates, 2, 3 years ago when mortgage rates were, 3%, right? And prices were probably around 50% less than what they are now, then you're not spending 75%. So just keep in mind, this isn't all the property owners out there aren't spending 75% in Los Angeles, San Francisco, and Anaheim on owning a home. This is if you were to buy a house right now today, right? And you're a brand new owner based on the household median income and the typical home price. Okay. Now, the most affordable markets in America are Pittsburgh, Detroit, and St. Louis. So if you're in one of those three markets, just realize you're in one of the most affordable markets in the U.S. when it comes to how much money people need compared to their income. Okay. But we're doing better. Okay. So this is a massive shift. Okay, we are shifting the other way, and the market moves really slow. So you can see these things coming from a mile away. All right. So how did affordability, right, get better when home prices went up 5%? Well, you've got wages that got better, you got inflation that got better, and you got mortgage rates that got better. Right. So those three things got better, and guess what? They're going to continue to get better. This year in 2025, they will be all those three days things will be better. Wages will be higher, inflation will be better, and mortgage rates will be better. It's not going to be like crazy night and day, but I bet you anything we get this under 40% and we get back to where we were in 2022, right? And I bet you we continue this. I bet you this trend continues downward from here. Now, when you look at home prices, this is what's incredible. Home prices are rising in every major metro for the first time since 2022. In every metro for the first time since 2022. So if you look at the different metros, right? Anaheim, Atlanta, Austin. If you look at all of them, you can see here what the median sales price was. Look at Anaheim, 1.1 million median. Now that's median. You look at Atlanta, it's 392. Austin, it's 450. Baltimore, it's 385. Boston's up there, 722. Look at Cincinnati, 286. Look at Cleveland, 229. Goodness. Wow, Detroit is 180. So you look at some of these, and it's just fascinating to kind of look at these. Let's see. Okay, San Francisco 1.4 million, San Jose 1.489 million. But nevertheless, these all the metros are rising right now, and that's the first time in a couple of years. So why are home prices going up if we just had the worst year we've had since 1992 in terms of the number of transactions in the country, existing home sales, new home sales? Like we had the worst year that we've had. Why are prices continuing to go up? Well, I'll tell you, it's two things: supply and demand. It's economics 101. If you look at demand, now here recently we got pending home sales are down, right? The most since 2022 in December. That's because mortgage rates, right? And this is kind of a leading indicator of where existing home sales may be. And this, by the way, was the headline of the article. And sometimes you got to go down into the fine print of these articles to really get the, like, this should have been the headline: existing home sales rose to the highest level in nearly 2 years. That should have been the headline. That would have been the headline I would use, but I guess that just doesn't sell too well. But look at existing home sales that rose to the highest level in nearly 2 years. That's an incredible sign, right? And this is in December, to a seasonally adjusted annual rate of 4.3. Now remember, existing home sales were around 4 million in 2024, 3.9, between 3.9 and 4 million. So, but in December, the annual adjusted seasonal rate was 4.3, over 4.3 million. Okay, that's the highest level since February 2023. They jumped 6% year over year. So these, of course, are people that went under contract in, maybe October, November, maybe even September, some of them. But nevertheless, this is why prices are continuing to go up, because of the demand. And if you think like if you think about the demand we have with high mortgage rates and high prices, and we still have this much demand, just think about how much underlying pent up demand that we actually have. Like whenever that gets released, I don't know when that's going to be, but that's going to be crazy whenever that releases. And that's why they're scared to really start dropping rates, because they know that. They know there's so much pent up demand. Let me know in the comments right now, how has your year started out? We want to know what market you're in. Like, is your listing sitting there? Are you selling a bunch? Let us know how your year has started out. And so supply and demand, right? So that's demand is the sales, supply is listings. Look at this. More than 1/3 of homeowners say they'll never sell. Not just that they might not sell soon, like they say they will never sell. A third. Now, they did this survey with about 1,800 homeowners. Okay, so who knows if that's a true representation, but you got 34% that say they'll never sell their home. Another 27% say they wouldn't consider selling for at least 10 years. Okay, so that's 27%. 24 say they plan to sell in the next 10 years. 8% plan to sell in the next 3 to 5 years. And then 7% within the next 3 years. So I don't know if this is like higher than normal, lower than normal. I don't have anything to gauge it to. This article doesn't say, well, this is what it was. We did the same survey 3 years ago, and this is what it was. There's really no benchmark here, except for it just sounds crazy, right? That a third of the homeowners say they'll never sell. 43% of baby boomers say they'll never sell their home. Homeowners are staying put because their home is paid off. Okay, well that's a good reason. Or they just don't want to move. And like, if you don't want to move and you're in your dream home, you just love where you are, man, congratulations, you have won at life. Like, you are the champion. Like, way to go. That's what we want as real estate agents. We want you to be in your dream home. We want you to be in a home that you're never going to move again. And like, I may not be speaking for all of you, but that's what my goal was. Like, I know that closings are going to continue to happen every single day. I'm not in the mindset of, man, I want these people to continue moving and so I can continue to make transactions and get commission checks and stuff like that. I know I'm going to get mine. I don't like, if they decide, if they're one of the very few that decide this is where they want to be, man, I'm going to be happy for them. And that's what it sounds like a lot of people. And like, for me, I don't plan on moving out of my house I'm here. I'm here for 20 years from now, and I already been in here. Already been here for almost 5 years. So I'm talking about a 25, and this kind of is a dream home. I don't think it's not going to be my. It's not going to be like the forever home. Who knows? But it could be my forever home. But I don't plan on moving anytime soon. All right. Home prices rose 0.4% in December. What was interesting about this is that on a year-over-year basis, home prices closed out the year 2024 up 5.4%. Okay. The smallest annual increase since 2015. So that just tells me that we're getting back to pre-pandemic levels here. I mean, 5.4%, that's the smallest annual increase since 2015. That's crazy. I didn't even realize that we had higher than that since 2015 because that's back. I mean, 2014 was the first year it did 100 deals. 2015 was the second year it did 100 deals, right? And I didn't even realize on a national basis because I didn't pay attention to national numbers when I was selling. I paid attention to my local numbers. I knew like you asked me something, I could have told you anything about what's going on in the local market. But I didn't realize nationally that we didn't have a year lower than 5% since 2015. That's crazy because historically we're at 3 to 5%. Now, when you look at the big chart here, right, this tells us some stuff because now we have our second piece of data in 2025 here, the green line, and new listings are down 3.6%. Okay, new listings down 3.6%. So kind of in line, but a little bit down from 2024. Now we're up from 2023, if you see that, but we're pretty much in line with 2024. Pending sales took or is taking a dive right now, and that's due to the fact that mortgage rates were 7.25, and now they're 7.08. They're unchanged today, and yeah, they've been in the low sevens since the beginning of the year. So I expect these pending deals to kind of start to pick up now that we went from 7.25 down to 7.08. I expect that to start picking up, and I would expect mortgage rates to dip down into the high sixes at some point. And I think that's going to be big for pending sales. But like that's what I'm saying. Like realizing what's happening, looking at this data in your market, and then kind of preparing for what's to come. When pending deals are down, that just tells me we're fixing to have a bunch of sales happening. Because every time that sales go down, demand is brewing, right? We already have this massive pent up demand, but then we have this sub layer of pent up demand that kind of ebbs and flows with mortgage rates, seasonality, etc. Right? When you look at home sales, you can see they're doing the same thing they do every year. They drop off this time of year, but we're up about 11% right now in home sales. So that's fantastic. That's a great way to start out the year. I'm excited to see where that goes. If you see prices, we started out 5 points higher. Right now, we're at about 6 points higher than we were last year, but it's kind of flat. You see that number is like that bar is literally flat. When you look at active listings, and this is interesting, they're dropping like a rock. You see the shape, you see the where this line is going. Active listings are dropping like a rock right now. Now, what you should be doing when you look at months of supply, it's about what it was. You know, it's a little higher, but it's got the same shape that we're creating here. When you look at days on the market, you know, that's about what it does. Every time this time of year, we're higher than where we were, but it's doing the same thing that it normally does. But what you can do is you can go in here and you can search your market. And that's what you should do. You should look it up on Redfin. You should Google search and find the companies that have local data that you can kind of keep up with. You should be watching your MLS hot sheet every single day, and you should be really digging into the local data so that you have your finger on the pulse and you can create great content in your weekly email, through video, through written word, whatever you do, okay, to get the word out about what's going on, to show people, hey, you're on top of the market. You're the expert. You're the one that they need to come to when they decide to buy or sell. So the next thing you want to think about is, okay, in this unaffordable market that we're in, who got hit the worst, right? Who took the brunt of that, and who took the brunt? First-time home buyers. First-time home buyers their share of home sales hits a 43-year low. 43-year low. Okay. Now you think about first time home buyers, they're the most uneducated when it comes to the home buying process. So they're very difficult to work with because you have to baby step them through every little thing. And that's okay if that's your thing. I'm not talking down about it. I helped a lot of first time home buyers, but they're not the most efficient to work with. Okay. And now on top of that, you've got the fact of this unaffordability into the picture, which creates an even bigger gap of efficiency in your business because now you have to baby step them through everything. And then you have to also fight through the fact that they're scrounging for their down payment, etc. Okay. So those aren't primarily going to be the highest quality prospects. Okay. First time home buyers. And just to be honest with you, any of those random buyer leads, right, aren't really going to be your highest quality prospects. Who's going to be your highest quality prospects? It's going to be homeowners, right? So you think about homeowners, people that bought 2 years ago, 2 years or more ago. Okay. This is going to be like, this is from me to you. This is what I would be thinking about right now. Okay. Who has the buying power? Who can actually do things right now? It's these homeowners who have benefited from this price run up. So you take a homeowner, let's say they live in the property, it's their primary home, okay? And they've lived there for more than 2 years. They live there 2.5 years, 3 years, 5 years, whatever it is. They've got a massive amount of equity built up. Now, what can they do with that equity? Well, when they sell their home, they don't pay any taxes on the gains. When you live in a primary house for more than 2 years, you can sell that home and keep all the money tax free. And so, what you should do with that, right, is call existing homeowners. Now, I've always been the guy that doesn't filter my Red X, but like I'm thinking about this and I'm like, you know what? I still don't know if I would filter it or not, but I would have it to where I knew when I was talking to somebody who owned the property more than 2 years and live in the property. You can actually filter it in RedX to that. You can filter it to primary homeowner that have owned it for more than 2 years. And that is absolute gold. You can do it in 2 seconds. And so you can talk to these homeowners. They might not even realize, and you'd be surprised. Most of these homeowners don't even realize that if they live in the house for 2 years, they can save on the capital gains and they can actually take that money, put it down on their new home, buy the rate down a little, and literally have the same mortgage payment in a house they actually want to be in. Okay. And that's very interesting, right? That concept, the fact that they can save on the capital gains. Another angle is the new construction. I've been talking about the new construction strategy where I'm going after people that own older homes around these newer subdivisions where the builders are giving all these incentives, buying the rate down, giving closing costs, appliances, all that stuff, and saying, "Hey, would you like to be in a new home?" Because I believe that I can get you in there for about the same mortgage payment, maybe even cheaper. Okay, but the bottom line is this. Okay. And also investors, they can 1031, right? It's people that have had investment homes, rental homes, and properties for the last 2, 3 years, residential, not multifamily. I mean, multifamily's done well depending on when you bought it, but multifamily got hit a little bit. And so did commercial. But these residential homes, these rental properties, these duplexes and stuff like that, smaller multifamilies, they have increased in value a lot. And you can hit those investors up because they can 1031 into their next property tax free. These are the things that you should be thinking about. Who has the buying power and how can I get into conversations with them? And that's exactly what I was fixing to say. I'm just giving you a couple of ideas, but at the end of the day, the bottom line is that you should be focused on talking to the main players, the highest quality prospects who have the power, who have benefited from this market run up. That's the clients that you want. I created a full 90-day action plan, 44 pages with scripts and strategies and formulas and everything that you need to set your business up. Go there and download it at zero2diamond.com/90. I'll put a link in the description. Get it. It's all there. Let me know what in the world that I can do for you. And I hope this video blessed you. I hope this video hit you in some kind of way that makes you take action, not just watch a video and go back to doing what you were doing, but actually got the wheels turning to make you take some serious action. I'll see you guys on the next video. Let's go.